Ladies and gentlemen, your 401k is dying to hang out with you under these new stimulus rules. Now, I know what you're thinking. You're saying, I'm not old enough to hang out with my 401k. It will penalize me. It will tax me. But there's some special rules in place this year that I want to make you aware of under this new stimulus package that you need to know. Well, good morning, everyone. My name is Mike the CPA. If you're joining us for the first time, I just want to welcome you to the channel. On this channel, I produce videos around finances, investing, and taxes to help you understand these complex subjects and to help you build wealth. Everything you're going to be seeing on screen today is going to be free to download, so make sure you click the Dropbox link if this is something you want to have access to. And I'm short on time, so I just want to get right into the content. I appreciate all of you being here, and this information I think is crucial during these economic times. But if you want to get this information or help get this information out to as many people as possible, if you do me a favor, if you click the like button, if you share this video with others, I greatly appreciate it. And that's how you can support the work I do producing these videos. There are two new rules that you need to be aware of right now. These are just temporary. They're going to go away. But here's what they are. We're going to talk about the distribution rules, penalty-free distribution rules, and we're going to talk about the current temporary rules around 401k loans. Starting things off with penalty-free distributions. This option is going to be available to you through the end of 2020. And what it basically means is when you take money out of your 401k right now, even if you're under the age of 59 and a half, you're going to be able to take that money out penalty-free. So you're not going to be hit with that 10% early withdrawal penalty. Taxes, you still may be subject to, which we're going to talk about in a bit. The accounts that qualify. This includes your IRAs, your Roth IRAs, your SEP, your simple IRAs, 401ks, pension plans, 457 plans, and 403b plans. On a side note, because of everything going on right now, if you're already required to take a minimum distribution from your retirement account, that requirement for this year has been waived, which might not be a bad thing since the market has taken a bit of a nosedive and your required minimum distribution would have calculated to be a higher amount when the market was higher before we entered 2020. Just like anything else in life, not everybody's going to qualify for this because but the definition of who it covers or who it applies to is very broad, but it's always good. I advise you to check with your plan administrator at your company. So whoever runs your 401k plan. From everything I've been reading, this is a broken down list of who this applies to. So if you've been subject to quarantine, if you've been furloughed or temporarily laid off or fully laid off, if you've had to close your business, if you're self-employed, or if you had to reduce your business hours, that's going to affect you. So certainly, this might be a situation for you to be able to take this distribution. If you're unable to work due to childcare circumstances or changes in your childcare, because schools are closed, because your daycares are no longer available to you, I mean, that's obviously wrecking people's workloads right now, is just trying to homeschool their children during these tough times while continuing to work from home. It's been very challenging. So that is another reason or another way you can qualify for this distribution penalty-free. And of course, the biggest one of all, and which I hope this is not you, but if you've been diagnosed with the heebie-jeebies, is what I'm calling it, or somebody in your family has been diagnosed with heebie-jeebies, your immediate family, you're like such as your spouse, one of your children, then definitely this is going to apply to you. The next question you may be asking is, am I going to have to pay tax on this? And the answer is generally yes. There's some exceptions, which we're going to discuss in a minute. Now, the 10% penalty, that's not going to apply. You're not going to be hit with that penalty. But ordinary income taxes on these 401k, these traditional IRA distributions are definitely still in place. But Congress has provided some additional relief, is that they're going to give you up to a 3-year period to pay taxes on that. Now, I have not seen how they're going to implement this yet. My suspicion is that they're going to allow you to report some of this income over a 3-year period to spread out the tax liability on this. That's what I'm thinking. Or if they don't do that, they're going to have to, on your tax return, there's going to have to be a way for it to figure out or calculate of that tax you might owe, how much of it is from these kind of distributions. So I think that's how they're going to approach this. They're going to do one or the other. But we're not sure yet, and I haven't seen any guidance on that. If you've seen it, if you know what they're doing with that, please share that in the comment section below. I would greatly appreciate it. The next question you might ask yourself is, hey, if I have 3 years to pay taxes on this, well, what if I take these distributions thinking I really needed the money, I end up not needing the money, and I pay it back, pay this money back within 3 years? whatever amount you pay back within that 3-year period, you're not going to have to pay taxes on that because it's going to be no longer deemed as a distribution. Moving on to the 401k loans that can be up to $100,000. Now, this time period is a little different than the penalty-free distribution. So this is something you really need to pay attention to. This date is you have until September 23rd of 2020 to take out a 401k loan that follows these special rules. So these special rules we're talking about only apply until September 23rd, 2020. Put a reminder in your cell phone because by God, you're going to forget that date because I know I am. Now, what retirement plans qualify for a loan? Well, it's only your 401k or a 403b type of plan. If you are self-employed, you have a few options. If you have an IRA, a SEP IRA, you can actually go set up a solo 401k, get that set up, and you can roll that IRA or SEP IRA into a 401k and then borrow from it there. It's a little bit of extra legwork, but that's something you can do. So make sure to look into that. If you're interested in it, talk to a plan administrator and they can help you figure that out. The bad news though, if you do not have a 401k, if you have just a normal IRA or just a SEP IRA, those accounts, remember, you cannot take loans from those accounts. Now, this part's pretty cool for you guys. We don't have to pay taxes on this. So if you take a loan from your 401k, no taxes apply. As long as you continue to make the payments as scheduled, you are allowed to miss one payment. If you miss a payment, that's fine. But it's only one payment. After one payment is missed, if you miss a second payment, what can happen is it can trigger what is called a deemed distribution, whereby all of that money that from that 401k loan now is considered a distribution to you. And yes, you get the money, but now you have to pay tax on that entire distribution amount in that year. Not something you want to do, especially not right now. So how much can you borrow under these special rules? Well, what we're seeing right now is that you can borrow up to $100,000, or you can borrow up to 100% of your 401k account balance if that account balance is under 100 grand. So let's say your total balance in your 401k is $65,000. Well, you can borrow up to $65,000 if you chose to do so. Interest rates are kind of a weird animal in this situation because normally when we borrow money and we have to pay interest, we're usually, paying interest on a credit card, a mortgage, or whatever. But this is essentially we're borrowing money from ourselves. Kind of weird. One hand borrows from the other, right? Interest you pay is interest you're paying to yourself that is going back into your 401k account. Interest rate wise, it fluctuates, but usually what they do is they look at the IRS prime rate and they add about 2% to that to determine the interest rate on your 401k. The interest rate you can expect to pay on your 401k loans currently is anywhere from 5 to 5.5%. But wait, there's more. If you're a business owner and you use your 401k to borrow money from, the interest you pay is just like interest you'd pay on any other business loan you take, like a line of credit, like a loan on, a piece of equipment or whatever it may be. Well, that interest you pay, that amount becomes deductible interest on your return. Now, how many loans can you take? Well, in theory, you can take as many loans as you want, but the thing is, what you might run into, depending upon your plan, is some plans limit you to one loan per year. So that's something you should definitely speak with your plan administrator about, of how many different loans you can take, because if you can only take one, you want to think very carefully about how much you want to take out this year. And of course, like with 401ks, the thing we dread about 401ks are fees. So fees are no exception here. Generally speaking, when you set up a loan from your 401k, there is a one-time fee, and that fee has been seen to range, depending on people's plans, anywhere from $50 up to a few $100s. Like anything, guys, this has pros and cons. I would not encourage anybody to take this out unless you really need the money or you know how you're going to use it. If you think of it this way, so the market has taken a dive, right? So the market's probably down 20-30% from its high in 2019. Now, it could go much lower. I have no idea, but this is for people who are suffering from hardships. Some people I've heard talking about they're going to borrow from their 401k right now, and if the real estate market crashes, they're going to use that borrowed money to help put a down payment on real estate. So different people may use this in different ways. But like I said, if you don't need this money, then it's probably not a good idea to take this out. So you just have to weigh the pros and cons. Ultimately, that's up to you. Consult with a financial advisor. I am not one. I am a certified public accountant. But consider all the angles before you decide to go down this road. The money you take out now is going to kill any compounding interest you have in this account in the future. Some people may want to continue to, definitely contribute to their plan. If that's, if you're investing for your retirement, it's better to buy things when they're getting cheaper, not when they're going up, right? The best time to buy is when things are on sale. So many people I know are actually contributing more money to their 401k plans right now and upping their contributions if they're able to, if they're in that kind of financial position. Coming up, I'll have a lot more investing videos, guys, as we wind down tax season, but one of the videos I've been getting a ton of requests on is regarding SBA loans. I'll be working on that probably next. If you enjoyed today's video, please let me know by clicking the like button. Share this video with your friends and family so they have this information. I'll have a lot more videos around finances, investing, and taxes coming throughout the year. Take care of yourself, everybody. Live life uncaged, and I will see you in the next video. Love y'all. Peace.